estate investors have as it relates to real estate. But one of my clients who's been very successful in the GTA area is saying, Shane, the market is very difficult to find good assets right now. How do I, get into a different market? And so he and I are strategizing on that, and I've got some ideas. But one of the things that I left off the email with, and then tomorrow when we have our group call, we'll go into it deeper. But I said, because of how much experience he has and the level that he's playing at, he could certainly benefit from a podcast. And so anyways, maybe I'll report back on some of the things that I shared with Jose on that group call tomorrow. But let's get into why you are likely tuning in today. And that is, what are the 3 big problems? And then if I just left you with the problems, that wouldn't be very helpful. So I'll talk as much as I can about some of the solutions that I think would be helpful, at least at a macro level. Like each one of these problems breaks down into what I have like frameworks and then strategies and tactics on how, and they change depending on the market that you're in, right? The market that I'm in Calgary is very different than the GTA or Vancouver or Winnipeg or Kelowna. If you are a developer versus a value add investor versus someone who's in retirement. So I can't give you a blanket answer and say, this is exactly how you should go out and find a property, or this is exactly how you should underwrite a deal. But what I want to hopefully give you today are some best practices and principles that I use and concepts and frameworks that I think that you can apply to your own business. So I've already kind of talked about 2 of them, and that is, how do you find properties? How do you find really good properties? Okay. Because I think one of the biggest challenges that new investors have when it comes to commercial real estate is, I don't want to invest in the wrong property. I don't want to lose money, which is a very real concern, even for me today. I'm always hypersensitive on the type of properties I'm looking at. So that's number 1. Number 2 is, once you find a property, how do you underwrite them so that you really understand the numbers behind the property? And that is something that I, even with my coaching clients, and last week I actually had a really good call with a client of mine, Darren. And funny enough, he actually sent me an email yesterday saying that he put 2 properties under contract over the week. So this is a really action-driven investor who gets out there. But one of his comments was, as it relates to commercial real estate, and this is a guy that's been around for a long time, 15 years, 10, 15 years, was, how do you underwrite these commercial properties? And I kind of take for granted, because I've been doing it for so long, and I don't know if I've underwritten 5,000 properties, but definitely in the thousands of properties. And sometimes it's literally on it could be just on like a pink piece of paper, because I've done it so many times. But if you're new, then you're likely spending a lot more energy and time, and you probably have big, long Excel spreadsheets, because I know I'll have clients that'll come in and they'll show me what I call the BOE, or the back of the envelope. It's not a back of the envelope, it's a full-blown underwriting. But and there's nothing wrong with that, because what it does is it shows me their thinking process. But eventually, once you get good at underwriting deals, you'll do it very quickly. And the people that have mentored me, they won't even write it on a piece of paper. They can do it in their head without a calculator, because they've done it so many times. And some of them, I think, are just really good with numbers. I'm good with numbers, but if I'm trying to calculate a 4.5 cap on $390,000 of NOI with a 6% vacancy, I'm probably going to use a calculator. Some of the people that I've worked with, they'll do that math just in their head. So it's not necessary, and I don't want to scare you off into thinking that that's what you need to be able to do. But just those are the different levels, right, in terms of what you can aspire to. The third, and this is usually where I think a lot of real estate investors falter, and that is, once I have a great property, I've underwritten it, it's a great deal, I love it, how do I get enough money to be able to close on it? And that's probably one of the kind of specialties that I have as it relates to raising capital. Very different than most of the people that are teaching it. I don't do joint ventures or those type of partnerships. There's nothing wrong with that, especially in the residential world. That works well. I really focus on club syndications, small group, high net worth individuals that come in, invest, GP, LP structure. If you don't have my book, go get it. I don't even know. I may have changed it, but you might be able to still get a free PDF copy of this club syndication on my website for free. If not, it's like $7. So, I would say if you drink coffee, this is as valuable as a coffee. Okay, so let's get into some of the solutions here. The first solution, as it relates to finding deals, and this is a concept that it took me a long time to see. One of the great things about coaching, I'll just kind of go off on a quick tangent, and that is when you coach, you have to take what's invisible, what you do on a daily basis, and then to teach it and help someone else, you have to break it down in such a way that someone that's never done it before is able to A, understand it, and then B, be able to apply it in their own situation. And, I'll give you a good example. My dad, both my parents were teachers. My dad was a principal. And what's great is because he doesn't come from the world of commercial real estate, and he and I will get on the phone sometimes, and he'll actually help me and teach me how to teach. So that's kind of like at a very meta level. But because I'm so concerned about getting clients a result, that I'm always looking for best practices on how I'm able to take what it is that I know, knowledge and wisdom, or whatever you want to call it, and then help someone apply it in their own world of investing. And fortunately, I've had some really great feedback. I'll just take, let's say, the last 15 people that have come into my coaching world, and I've just got my iPad here, so I'm looking at it. But Darren, he's got 2 properties under contract. I had another client that put a 17-unit apartment under contract. And a lot of these are like first-time people into commercial real estate or multifamily. Bob bought a 16-unit. Tim, I think he closed on a 50-plus, and then he sent me a text saying that he's got like a 70-unit and a retail property. Peter, he's closing on a project at middle or end of this month. Another lady who joined me a little while ago, it took a little bit longer, 4 or 5 months, but now she's raised the money and closed on land to be able to do a development. So I don't know the exact percentage, but it's anywhere from kind of 40 to 50% that are actually getting the results that they came in for. To me, when I tell other quote unquote coaches and people that are in the industry, they're like blown away, because most people are getting like 5 to 10% and they're happy. And I'm close to 40 to 50%, and I'm unhappy because I'd like 100% of people. I know that's probably not realistic, because you can't force someone to go out and actually take action. However, most people come in with a really sincere desire to do it, and I have pretty high vetting in terms of making sure people actually, that I'm only taking on people that I can actually get a result for. So that's probably why the percentage is much higher. But if I could get it to 100, then I'd be pleased. So all that said, here is the framework for finding properties. So if you can think of like a line that goes straight up and down, and then one that is horizontal, and they intersect. So basically it's like my mind is, I just had a text pop up. I've got to get off in 15 minutes to talk to my banker on a deal I'm working on right now. But just think of it like a cross, okay? And at the very top of the cross, you've got direct. At the very bottom, you have indirect. On the left, you have listed properties or on market. And then on the far side, so one was left, this would be your right side. This would be off market, or what I sometimes call pocket listings. And so these are the different ways that you can approach and think about finding properties. Direct, I'll give you a great example. So back in the day when I was a broker and I was working with a lot of developers, we would essentially knock on doors, cold call, drive around, find a property, pull title, and contact the owner. And most people will never do that. And that's why when but what's shocking is I will still do that, number one. Number two, even though I don't have to, I'm in a different situation where people bring me deals, but I would still do this if I needed to find a property. And the benefit of it is, you're able to really focus on deals that you want to invest in. You don't have to wait. A lot of new investors focus on like the far left, I guess, which is on market listed properties. And in commercial real estate, very different than residential, is most great properties will never hit the market. Brokers generally have a list of top buyers. So I'm not on the list of every broker, certainly, but the people here in Calgary, the people that I want to see deals from, I'm definitely on that list. And I would say that I would be in probably the top 3 for a couple of different brokers. And then my partners are also on some of those lists, and sometimes they get the first phone call. And what's great is, if you've got a couple of different partners and you're on a couple of different lists and you have really good relationships with certain people, you're able to see on-market deals, pocket listings meaning a broker knows a seller that is interested in selling, but the seller doesn't want to go to kind of an on-market or an official listing. So that would be a pocket listing. So when I'm doing a direct deal, so back, I don't know, probably in 2015, 2016, no, actually it was, maybe it was 2016, 2017. My partner and I, we found a property. It was, what would be 8 figures. And we approached the owner. They weren't interested in selling. 6 months later, they contact us. Actually, we do want to sell now. And that property will likely generate, multiple 7 figures for the individual that I helped acquire that. My partner and I helped acquire that. So that's direct. Now, it took 6 months, 7 months, something like that for it to go through. But if you can make multiple 7 figures, it's and none of this was difficult. This is a couple of coffees, going out for dinner, building a relationship. So there's a level of trust, but that's how you do a direct deal. Indirect is I've got a person, not a broker, who calls me and says, "Hey, Shane, this was actually another developer, funny enough, and this is on my retail property." They didn't call me, they called my business partner. But the principle is the same. And they basically said, "Hey, we've got this land. Would you guys be interested in developing it?" And we made a few phone calls, found an anchor tenant, and we ended up closing on it 4 months later. And now it's, I don't know if it's going to be 8 figures, but it'll be very close to that when it's fully built out. So these are just different ways you can think about it. Are you going to go direct? Are you going to go indirect? Are you going to go on market, off market? So in commercial real estate, the people that are waiting around for deals to come to them, unless you're like, and even I would say, even the guys that are billion-dollar companies, they have acquisition departments where it's the job of the person that's out there finding deals to basically hunt, build relationships, and find properties before anybody else does. You always want to be the first person. If you're waiting to find a deal on LoopNet, maybe it happens. It hasn't happened for me, so it's why I don't teach it. So that is a construct that I think that you can start to think about for finding deals. That's number 1. Number 2, underrating deals. So there are some very advanced strategies. Like if you ever worked at a brokerage, commercial brokerage, they will have analysts that spend 2-3 years to learn how to underwrite deals effectively. Okay. And they will usually train them on how to use Argus. Argus is a pretty expensive program, but it's very robust. Nowadays, there's some pretty solid Excel spreadsheets that you can do for IRRs, net present value, PVs, cash on cash, IRRs. Maybe I already said IRRs, whatever. But the point is, you can do a lot of this just using Excel spreadsheets. You don't need Argus, although Argus will layer in a lot of assumptions. And so one of the things that I always train my clients on is figuring out what the NOI is, net operating income, on a property today is not that difficult. It's basically taking all your revenue minus all your expenses, and you come up with your net operating income. Okay. Now you're going to have vacancy in there and a few other kind of, how much are you actually, like, let's say it's a retail property. Like, what are you actually getting back in terms of the CAM and op costs, and what's reimbursed to the landlord versus what's the responsibility of the tenant. So yes, you can start to layer in and complicate it, but you'll be able to get about 98% of the way there just using a simple BOE, and that will get you enough to be able to say, this is a property worth looking at, or you know what, this is completely, the vendor is, being very unrealistic with respect to the value of the property. And so that's really all the BOE is just a back of the envelope. Is this a deal I want to spend time on or not? And rookie or new investors will spend weeks on a deal that they could have literally, grabbed a pink sticky, right? That's why it's the only thing I have in front of me here. If I had a napkin, I'd show it. And essentially just use that to come up with a quick valuation. And then so that is the science. What are the numbers? The art is, what is the future NOI going to be? What's the net operating income going to be into the future? And a lot of those assumptions, the reason I say it's an art is because that's going to come down to your level of understanding of supply and demand fundamentals. What are the rents today? What are the rents going to be in the future? What new product is coming online? What are the expenses? What's the vacancy rate? What are the interest rates? All of these are going to impact the assumptions on, and the assumptions are then going to impact your evaluation. And I would say that one of the great things about having someone outside of, someone that's arm's length from you, because sometimes if you're an investor, you'll look at a deal, you'll fall in love with it. And I see this so often, I call it blue sky. Their assumptions, they say they're conservative, but it's essentially so blue sky that everything has to line up perfectly in order for them to hit these numbers. And I will stress test it and say, what happens if your income comes off 10%, 15%, 20%? What if your expenses go up? What if your vacancy takes longer? What if your TIs are more expensive? I mean, what if all this unforeseen, negative stuff that nobody wants to think about, because we all want to be positive and optimistic, and that's fine. But when you're putting up millions of dollars or raising millions of dollars, you want to really stress test it. And I can tell you, some of the stress tests I see are ridiculous. When you're buying a multifamily for a 4.5 cap and your worst case scenario is that rents stay flat, then in my opinion, that is not stress testing a deal. That is blue sky. That is hoping that everything stays the same. And the reality is, when you've been through a few cycles, and it's not that I'm so old, but my introduction to real estate was on the lending side, and we were hyper conservative. And the people I learned from, this one individual, Rick, I mean, he would tell me stories of when he was lending back in the 80s and describe the importance of debt coverage ratio, or your DCR. And if these terms are sometimes I throw out some terms, just go back, rewind it, Google it. I mean, Investopedia, I think, is probably one of the best places you can find like 99% of the words that I'm using, or terms or acronyms. But this is the language of commercial real estate. And okay, enough about that. So as it relates to underwriting deals, the science is, what is the number today? And one of the mistakes I see is that new investors will look at a pro forma. A pro forma, by its very definition, means into the future, or like projections, not real. Okay, so you want to be looking at real numbers. This is what the true cash on cash is today. Cash on cash is, how much am I putting out, and what's the return that I'm getting in the first 3 months, 6 months, 1 year. Okay, and then from there, you're going to take that and you're going to project into the future, and you're going to make certain assumptions in terms of what is the NOI going to look like. Okay, I got 5 minutes left before my call with my banker. So last problem, how do I raise money? So like I said, you can get my book, Club Syndication, and that goes very deep into how to raise capital. But I had a conversation with a guy yesterday, and frankly, it was a very short conversation, because I don't think he really wanted me to ask him questions, which I'm not entirely sure. When you schedule a call and you want to, raise $1 million, $2 million, and then the person says, ask just a couple of very basic questions. I'll tell you the questions I asked. So, how soon do you need the money? How much are you raising? What's your track record? And who's your team? I mean, if you can't answer those questions to me, and I'm trying to help, think of what happens when you go and ask someone for $100,000 or $500,000. and you're either kind of beating around the bush or you can't answer it. So what I would say is when you're out looking to raise capital, how soon you need it is very important. Because if you need the money in 30 days and you need to raise $4 million, you can come across very needy. If you've given yourself 6 months, a year to go out and raise $4 million, and you can put in the proper foundation, and then you can start to indoctrinate people, indoctrinate in the sense of who you are as a person, as an individual, so that they get to know, like, and trust you. And then when you have a real deal and you've already had 10 conversations with them, and it doesn't have to be one-to-one, hence why I do these podcasts or the book or anything like that, you're able to pick up and there's already a level of trust built. Okay. So as much as possible, if you're thinking of raising capital, start it way earlier than you think you do. And if you don't have a real deal, find a deal that you think would work and make sense, something that you could find in the open market, put that together and say, if I found an opportunity like this, would it work? I call it a mock pitch deck. Okay. These are the strategies that I give to my clients. Okay. The difference is I'm trying to do the equivalent of what I take clients through in like a 9-week program, and I'm doing it in 30 minutes. So obviously I can't go into the same details here, but I think what I'll do is I'm just going to essentially wrap it up because I've got 3 minutes and my phone will ring because I'm sure this guy's going to be prompt. Usually when people are lending a lot of money, they will show up on time. So you'll see when my phone rings, and we'll take it from there. So last, what I would say is this. If you are really serious about investing, and you don't need to work with me because for many people, I'm not the right solution. Okay. I work with a very defined, narrow set of people that I know I can get results for. But what I would say is, I was actually reading a great book by Donald Miller, and he uses the analogy of business like an airplane. And I'm actually starting to use that more and more in my own coaching. But if you think about this, a lot of people, when they get into commercial real estate, or they're thinking about it, if you will, I say thinking because they haven't made the commitment, is that they will watch a lot of videos, read some books, go on YouTube, listen to podcasts, and all that's fine. But similarly to, say, learning how to fly a plane, if you think that you could read a few books, watch some videos, maybe go in a simulator, and then, by yourself go into a plane and take off and think that, it's going to be smooth sailing, there's just so many unknowns that can happen. In every deal I've ever been in, and you can talk to pretty much any seasoned investor, they will tell you the same thing. No two deals are the same. So what you need is like a skill set, and hopefully people around you, and it could be service providers, lawyers, mortgage brokers, commercial real estate agents, but also having some mentors and guides along the way to help you. And ideally someone that has a vested interest to help you, because I would tell you a broker, even if they have the best intentions, and there's nothing wrong with it, but just understand that a broker's job is not to educate and inform you. They're way too busy. And that's why a lot of people, unfortunately, never get into commercial real estate, because they don't have anybody there that can kind of help them. I understand. I was very lucky. I had my father-in-law. I also had another mentor, Jim, who I literally had a 30-minute conversation with. I don't pay him to do that, but I've made him, I don't know how much money, because he's been in about 8 of my deals, and he's made, probably, in the millions by now. So he will take my phone call and I can get quote unquote free advice, but it's not free. There's a quid pro quo. There's value that he gets from having those conversations, because he's always the first person to see my deals. So just start to think about it a little bit differently. If you are really considering and thinking about getting into commercial real estate, try to find someone that could be your co-pilot, someone that can help you on that journey. The analogy of going up a mountain, you want to have like a guide with you. Those are all very practical analogies or metaphors, if you will, for going into the world of commercial real estate. And the reason I say that is I've just seen so many people that have invested, because when I was a broker, I would see this. I saw a coach, a guy that was teaching other people how to invest in commercial real estate with a property that was underwater by about $2.5-3 million bucks, and he was feeding it, and yet he's over here teaching people how to do it. And so It's those kind of situations that really bother me. And this guy's late, unless I was supposed to call him. No, he's calling me. Anyways, that is it. Hopefully this was valuable. Episode 100. I'm humbled by the fact that I've had so many people reach out, and I've really kind of grown the relationship. Okay, that's him right now. All right, I got to sign off. Have a great day, and I will see you next week. Episode 101.